please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Asian markets have started off on a tepid note after the US markets closed more or less flattish with a mild negative bias following the passage of the tax bill. In fact, the Nikkei was down close to around 0.3%. The last time I checked, it's still holding with a bit of a cut. Remember, the Bank of Japan's monetary policy decision as well is awaited, so we'll be waiting for any kind of cues coming out of there. But the Kospi, that was under some pressure. It was down close to around 1%, so it's not had a great start to today's trading session. That's under some pressure, and the other couple of markets as well should come up for you on the screen. The Taiwanese as well as the Straits, they're more or less flattish to kickstart trade. What does all this mean for the SGX Nifty? Well, it'll indicate that we're likely to start off with a cut of around 20 to around 25 points.
Okay, well, let's apprise you of what took place on Wall Street then. Equities pared gains after hitting record highs as the Congress passed the long-awaited tax bill. Senate Republicans approved sweeping amendments to the U.S. tax code, including reducing the corporate tax rate to 21% from 35%. The Dow Jones slipped 28 points. The S&P 500 finished 0.1% lower, while the Nasdaq closed flat. Meanwhile, the tax plan boosted U.S. Treasury yields, which peaked to multi-month highs. CNBC's Josh Lipton gets us a wrap of all what took place on Wall Street.
The U.S. equities closed little change on Wednesday as Congress did approve a bill that's going to cut corporate taxes. The Dow actually slipped 28 points, where the winner today was Cisco, the loser Disney. S&P 500 finished 2 points lower, utilities and real estate offsetting a gain in energy. The Nasdaq closed down 3 points as large cap tech, Apple, Facebook, Alphabet traded lower. Senate Republicans approving sweeping amendments to the U.S. tax code Tuesday, including reducing the corporate tax rate to 21% from 35%. The House voted to pass the measure again on Wednesday. It's after procedural snag forced members of that lower chamber to hold another vote on the bill. Companies, though, interestingly, starting to respond already to news of tax reform. AT&T announcing that it's going to give some employees bonuses once that legislation is signed into law, specifically saying that more than 200,000 U.S. union members will receive a special bonus of $1,000. The company also increasing its CapEx budget by $1 billion in the U.S. Stocks did open higher on Wednesday before pulling back. We know investors have been eagerly awaiting lawmakers in Washington to move forward with the bill, sending those major stock indexes to record highs this year. In corporate news, shares of FedEx rose 3.5%. That's after the delivery giant's quarterly results surpassed estimates, and Micron shares popped 4% as its earnings and revenue also did beat expectations.
Well, the Senate Republicans have approved a major overhaul of the American tax system. The bill has been approved by a 51-48 party line vote. The bill will now be sent to the House for another vote before it's sent to President Donald Trump. CNBC's Ilan Mui joins in with the latest. Ilan?
A little delayed, but not derailed, as the tax bill now makes its way to the president's desk. Republicans' final tally on this vote was 224 to 201. House Speaker Paul Ryan brought down the gavel once more to make this official. Now, most of these big changes will take effect on January 1st. And House Ways and Means Committee Chairman Kevin Brady said that he was pushing for a new code for a new year.
This new tax code will be simple. It will be fair. It will be focused on the needs of the American people, not on Washington's special interests. This new tax code will be modern. It'll be competitive. It'll create more good-paying jobs right here in our communities, not drive them overseas.
Now, this is just a reminder of how sweeping and massive this tax bill is, particularly for businesses, lowering that corporate rate to 21%, instituting new rules for international taxation, creating a whole new system for pass-through businesses of deductions and taxation. This bill is going to be the crowning achievement for Republicans in 2017 and perhaps even for 2018 as well, guys. Back over to you.
Okay, and President Trump thanked congressional leaders for pushing through what he called the largest cut in the history of their country.
We're going to see something that's going to be very special. We're bringing the entrepreneur back into this country. We're getting rid of all the knots and all the ties, and we're going to You're going to see what happens. And ultimately, what does it mean? It means jobs, 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 jobs. So it's going to be really a very special period of time. We're in a very special period of time, and it's going to be even more so.
What this represents is a promise that each and every one of us made to the American people last year is a promise that is kept today. Something this big, something this generational, something this profound could not have been done without exquisite presidential leadership. Mr. President, thank you for getting us over the finish line. Thank you for getting us where we are.
Okay, and on that note, let's hear in what market experts are making of this big tax overhaul in the U.S.
We're all trying to wrap our heads around the 1,000-page tax bill at this point. And there are several things we have to weigh, right? There are lower corporate taxes. There is capital expensing, which are positives. But then we also have to weigh that with our expectation of higher rates and higher wages next year. So ultimately, we think it is a positive, but we do have to kind of curb our enthusiasm here a little bit because there is some pressure and cost coming from other parts of the economy. Actually, our view for the top sectors we like for 2018 is both financials and technology, because I think really taxes is just one ingredient we have to look at, right? There are other things at play as well. And there are some pretty solid arguments for both sectors, financials in terms of rates, in terms of credit growth, in terms of regulation, and for technology in terms of foreign profits and a weaker dollar. So there are arguments for both, but sector rotation for the next couple of weeks is possible.
Well, the European markets, they closed lower as the long-awaited U.S. tax overhaul waded through the Congress. In fact, in yesterday's trading session, the FTSE was a relative outperformer. If you take a look at it, that was down by close to 0.3%. But clearly, the CAC and the DAX were under some more pressure. Even the peripheral indices, the Italian index, that was down close to 0.8% by the time it wound down. But the ATX, that's one market, in fact, that did pretty well yesterday. In an otherwise weak showing from the European markets, the ATX ended with a gain of around 0.7%. But we should also focus on the emerging markets. Well, the Brazilian index, that was in focus. It managed to eke out gains of close to around 1% in trade yesterday. So that as well was the outperformer from the emerging market basket.
All right, well, let's tell you about the currency space then. The dollar has weakened against most currencies as now the US tax bill expected to be signed into law. Meanwhile, the yen has fallen versus the dollar ahead of the Bank of Japan meeting.
And in the world of commodities, then oil prices steady after edging higher overnight. Government data shows that the US crude inventories declined by 6.5 million barrels in the week that ended December 15th.
From precious metals, gold prices rise for a fourth straight session to reach a two-week high as US data showing solid home sales but a fall in mortgage applications pushed the dollar to a two-week low.
Well, back home on the Lal Street, the market snapped a four-day gaining streak with the Sensex and the Nifty closing mildly in the red. The mid-caps, though, they outperformed significantly, while financials, they were the big drag in yesterday's trading session, telling you that the Nifty Bank was a relative underperformer. Well, Anisha joins in early this morning with all the cues. Hi, Anisha. Good morning. Yesterday, the FIs clearly used this opportunity to sell into the cash market. How are you reading market setup today?
Well, yes, yesterday we saw a lot of profit booking happening in trade today, and that was evident because in the last sort of trade we saw the Nifty and the Sensex slip. Remember, early in the day we opened at a record high, but we're not able to sustain on to the momentum. And as you mentioned, it is very clearly evident even in the volume. It is very clearly evident even in the volume numbers because FIs sold over 1,500 odd crores in the cash market. Now the DIs were nowhere close to that because they bought just around 146 crores, and the clear profit booking coming into the markets. Now, what underperformed yesterday, as you mentioned, was the Bank Nifty. That one was down around 0.5%. Remember, today is the weekly options expiry as far as Bank Nifty is concerned. So watch out for the HDFC Twins because they were weak in trade yesterday on account of the fundraising news. Let's see how they react today as well. In terms of the global cues and the setup, that is also a bit weak because for the US markets, yes, the Congress and the Senate passed the tax bill, and now it is for the President Donald Trump to really sign it and make it to a law. But the street was really saw a huge run up ahead of that event, and on that event we saw a bit of profit booking because that market as well closed in the red. European markets as well closed in the red. Remember, it is the last, almost the last week of the year. The holidays are around the corner, and perhaps the investors are sitting on the sidelines because there are no fresh cues as far as the market is concerned. Even if you look at the Asian screen, the markets are a bit mixed. The Bank of Japan is expected to come out with the policy decision today, wherein they expected to hold it steady. But nonetheless, the markets are a bit mixed, and the SGX Nifty, if you look at that one is showing a downtick of around 20 points. The key important level to watch out for the Nifty is the trading range of 10,490 to 10,370 as per the expects. Remember, yesterday we hit a high of 10,494, but as of now, the cues are a bit tepid for Indian markets, and it suggests a weak opening. Back to you.
Okay, and Anisha, stocks?
Well, a lot of stocks that are making in news, telecom sector would of course be in the forefront because the 2G verdict is expected around 10 to 10:30 today. So no direct impact as far as the stock market is concerned, but of course it has a sentimental impact on the markets. Other than that, the textile sector would be in focus because the cabinet has approved a scheme of capacity building with an outlay of around 1,300 crores. So that should positively impact that sector. Jodi structures will be in focus because the creditors have approved extending the period of corporate insolvency resolution process for a further of 90 days. So some breather coming in as far as the move there is concerned. Varun Beverages will see an uptick because the board has shown the intent to enter into a binding agreement with PepsiCo. This is for the Jharkhand and Chhattisgarh region. However, this is subject to the final approval from PepsiCo, but I believe that the stock will react positively today itself. HDFC was in focus on account of fundraising yesterday. Just a small bit of news today that they have approved sale of 6.3% of equity of computer age management for around 200 odd crores. Not a very big news for the company, but something to keep an eye out on. A lot of fundraising is what we are hearing of late. Canara Bank has a QIP board meet slotted for 26 December, and for Pidilite there is a buyback meet that is slotted for 26 December, so something that we'll keep an eye out on. And IVRCL, lastly, remember the company has been debt laden and has been plagued by debt issues, but now they have entered into a share purchase agreement with Cube Highways to sell off the entire stake in Salem Tollways. They are getting a considerable amount for that, so that should hold up in the green. Back to you.
Okay, all right, thanks so much for that, Anisha. Well, time to slip into another short break, but we'll take a point that Anisha discussed forward. A special court will pronounce the fate of Top India Inc.
Well, it's been 7 years since a report by the Comptroller and Auditor General Vinod Rai rocked the political landscape of India, an explosive report that left the then UPA government in tatters and eventually led to its downfall. Today, a special CBI court will pronounce its verdict in the 2G scam case. Shireen Ban is here with all of the details.
It all began on the 16th of November 2010 when the country's top auditor Vinod Rai alleged that the 2G spectrum license were allotted at throwaway prices. 5 months later, in April 2011, the CBI swung into action and filed an 80,000-page charge sheet naming the then telecom minister A. Raja and a slew of corporates and bureaucrats. A year later, in February 2012, the Supreme Court cancelled the 122 telecom licenses that were allotted to 9 operators. In fact, Justice Singhvi called the licensing process arbitrary, capricious and contrary to public interest. The licenses allotted were declared illegal and quashed. Now, the mind-boggling number which knocked the UPA government cold was 1.76 lakh crore rupees. The CAG has estimated that was, and I quote, the notional loss to the exchequer because of this scam. The sale of licenses at 1,651 crore rupees for a pan-India play was the focus of the CAG's attention. But in its charge sheet, the CBI estimated the losses to the tune of just under 31,000 crore rupees. The main accused in the line of fire, the former telecom minister A. Raja and DMK leader Kanimoi. Raja has remained defiant till today, refusing all allegations of criminal conspiracy, forgery, cheating, among others. The 2G scam has led to significant changes in India's policy making as well as its corporate landscape. Natural resources are now auctioned and not allotted. The telecom sector has been under a spell of consolidation for the last few years, with most companies reeling with debt. The 7-year-long trial will culminate tomorrow, with Judge O.P. Saini delivering that much-awaited verdict.
Well, we also spoke to a whole host of legal as well as telecom experts On what this big verdict could mean, let's listen in to some opinion.
The corporate sector has now realized that the manner of functioning in the past of trying to get something for itself by getting cozy with the government or the powers that be will not work anymore. To some extent, the promoters will suffer, the promoters' reputation will be tarnished, and they will have to carry that baggage with them for quite a few years. So obviously this will definitely have an impact on the corporate sector. I hope there's a closure. My problem is that there will not be a closure, because even when the verdict comes, these companies will then find ways of going in appeal. I don't think they are going to be satisfied with this, and therefore I think the litigation will continue.
I think it's very, very important to get closure, because all manner of allegations were made. We had all kinds of headlines, and actually the situation goes all the way back to 2008 when these particular licenses were granted. So it cast a shadow not only on the industry but also to the whole process by which licenses were granted, by which spectrum auctions were to be held, by which spectrum was allocated. Bringing final closure to the grant of licenses to these 5 folks who came into the market, I think sends a very clear message in terms of the FDI that will now come in. It sends a message to investors. It sends a message to those people who've invested. It sends a message in terms of the transparency with which this business is going to go forward. And I think that's very, very critical when we are looking to invite up to 50,000 crore rupees of investments in this sector going forward. So the transparency that hopefully will come, the strength of the judiciary and the judicial process are all critical factors as we go forward.
There is a larger benefit or the larger good that has come out of exposing the scam. It has basically reinforced the institutional credibility of the CAG, which took on the government, and it I think exposed for the first time in this scale and form this nexus between crony capitalism and government. The fact that governments and government institutions could be so easily captured by a few companies. So I think that is the real impact of the 2G scam.
This scam was in the making from 2008 itself. And the CBI did register a case against unknown people. And CBI was virtually doing nothing till the Center for Public Investigations, Mr. Bhushan, Prashant Bhushan, Paranjoy, they went to the Supreme Court. And then it became a Supreme Court monitored investigation. The CBI was told, you investigate without interference. You go to the highest and look at the splendid job that the CBI has done. 17 people have been prosecuted. Secretary to the Government of India has been prosecuted. Minister has been prosecuted. A member of Parliament has been prosecuted. And God knows, the role of the Finance Ministry may come out during the investigation, during the trial.
All right, 10:30 a.m. is when we're going to get you that verdict, and it is going to be a comprehensive 360-degree coverage on CNBC TV18.
Now, the Reserve Bank of India has released the minutes of the 7th Monetary Policy Committee meeting. The document shows that all members of the committee, including Governor Urjit Patel, expressed concerns at the rising headline inflation number. Lata Venkatesh joins in with a detailed analysis now. Lata, with the expectations that inflation will be marginally higher going forward, does the rate hike look imminent?
An imminent rate hike is a strong way of putting it, but a likely one is what I would infer from the fine print. Let me look at a few quotes from what Governor Patel says, and he actually is perhaps exactly the middling one, not too hawkish and not dovish at all. He says that the MPC statement recognized that inflation is higher than was earlier forecast. Then he goes on to point out that there are several risks to the projected inflation trajectory as well, and that among them are not just the volatile vegetable, but also the fact that inflation expectations have shot up, input prices have shot up, and there is a chance that manufacturers will be able to pass through. And third, there is the fiscal risk. If that plays out, that also will put an upward pressure on inflation. Contrary-wise, of course, growth is somewhat better, and he expects some of the factors, especially manufacturing, to start improving. But broadly, he says, although the macroeconomic situation is as it was previously, the key differentiator is that crude prices are now higher. And so he leaves you with that feeling that inflation is going to be higher than expected. A slightly more hawkish statement comes from Viral Acharya, who points out that now there is absolutely no scope for accommodation, which means rate cut. That is absolutely out of the window. But then he wants to look at incoming data. He also points out that now the chances of inflation remaining above the MPC's mandated 4% for a longish, for the medium term, even going to 4.5%, is likely to be very high. And, he just leaves it at that. But then what is the MPC's mandate to bring it down to 4? So, that leaves you with the niggling fear that Viral Acharya is worrying whether the MPC mandate can be achieved without a rate hike. But the most hawkish of them all the while has been the executive director in charge of monetary policy, Michael Patra. He goes on to say that the phase of rate cutting has matured. Now he says it is time now to signal the end of accommodation and commence with withdrawal of accommodation. That is central bank speak for raising rates. Withdrawal of accommodation, in other words, means I am going to raise rates. And he makes no bones about it. He says the time has come for monetary policy to take guard and be ready to go on to the front foot. Of course, Patra even earlier has sounded more hawkish than the rest. The most dovish member, of course, has been Dholakia for the longest time, the external member. He says that, if RBI had cut rates in June as he had asked, then growth would have been in a stronger position. He thinks it is still weak and there is still scope to cut rates. Of course, he was the dissenting member and had asked for a rate cut. The other two members are largely neutral in their statement, Pami Dua and Chetan Ghati. But I would worry that all the three RBI members are on the hawkish, more hawkish and most hawkish in terms of their statement. I would not at all be surprised if there is a rate hike in 2018.
Okay, all right, Lata, thanks very much for that. Well, that is something that the markets will know, the bond yields will probably take into cognizance today as well. Time for a break now, but up next, the government sends out first notices under the anti-profiteering clause. Well, on to a headline from the GST front, and this one's a money control exclusive. It's been only a month since the government put in place an anti-profiteering watchdog, but the government has already swung into action. Money Control learns that the Finance Ministry has issued notices to two companies. The first one in Bareilly, a base dealer of Honda Car India, and the second is Pyramid Infratech, a Gurgaon-based realty firm. These companies are under the government's lens for not passing on GST benefits to the consumer. Sources say that the primary investigation against these entities is already underway, and the findings of the probe will be sent to the National Anti-Profiteering Authority. We also learned that this is just the tip of the iceberg, and the government is in the process of issuing notices to 7 or 8 firms, including an FMCG company.
Well, 2017 will be most remembered as the year the government and the banking regulator clamped down on the sector's bad loan problem by sending cases worth over 40% of the sector's stressed assets to the NCLT in one scoop. But CNBC-TV18's Ritu Singh reports that the IBC route to clean up bad debt is not the only thing the banking sector will remember 2017 by.
For India's banking sector, 2017 has been a transformational year in many ways. The most notable transformation is that the sector finds itself in the midst of the largest bad loan cleanup exercise ever undertaken. Because if 2016 was about digging the skeletons out of the closet, 2017 was about giving them a proper burial, a process that will hopefully give the banking sector some closure as 2018 comes around. In one fell swoop, the Reserve Bank of India took advantage of the recently cleared Insolvency and Bankruptcy Code and marched a quarter of the banking sector's stressed assets to the National Company Law Tribunal. It began with a dirty dozen, 12 accounts identified by the RBI in its first defaulter list. At the time, these 12 accounts together accounted for almost 2.2 lakh crores of the total 8 lakh crore rupees of stressed assets. By the end of the second quarter, the total number has ballooned to over 10 lakh crore rupees, but it was still a strong start.
The IBC puts a time limit of 180 days, extendable by a further 90 days, within which creditors have to agree to a resolution plan, failing which the adjudicating authority under the law will pass a liquidation order on the insolvent company.
But halfway through this 180-day IBC resolution timeline, the government threw these stressed asset account holders for a loop. The rules of the IBC race were changed, and these amendments drastically changed the equation between lenders and errant defaulters, especially when it came to these defaulters regaining control of their companies. So this could well mean promoters like the Ruyas of SR, the Singhals of Bhushan Steel and the Kejriwals of Electrosteel Steels could lose control of their companies for good. The 270-day deadline to resolve these cases before they end up in liquidation ends in April, and bankers are hopeful that a resolution will be found for most, if not all, companies.
If we had taken them to NCLT 1 year ago, the haircut could have been as high as 60-65%. Today, with the revived scenario, maybe the haircut would be 40 or 35%. The debt which they are carrying in their books at that level, even at the current EBITDA margins, it is not sustainable, and write-downs are inevitable.
But even as the industry grappled with the changed resolution process, the RBI identified an additional 28 defaulters, and most of these may also end up in the bankruptcy court. Together, these 40 accounts make up for over 40% of the banking sector's non-performing loans, and a successful resolution of these stressed assets may well signal the end of India's bad loans problem.
2017 was not just about non-performing assets. The year also saw banks regain their feet as the after effects of the government's demonetization drive died down. And it is these very after effects that also dramatically changed the entire landscape of India's digital payment ecosystem.
Even if you see pre-demonetization and now, the usage of cards at POS terminals, the usage of mobile banking as a mode of transactions is all up at least 60% or more in various banks.
RBI data shows that the volume of electronic transactions rose from 671.5 million in November 2016 to 994.3 million by November 2017. Transactions made through the Unified Payment Interface or UPI jumped from a mere 0.3 million in November 2016 to 104.8 million as of November 2017. And mobile transactions surged from 72.3 million in November 2016 to 130 million as of October 2017. Granted, this last number has since slipped to 50.9 million. But as experts say, a revival is possible since the government is not easing up on its digital payments push. In Mumbai, Ritu Singh.
Manisha Gupta is now with us to tell us what she's tracking in the commodity and the currency space. Manisha, morning, over to you.
Well, thanks so much for that. It really has started as yet another positive day for the commodity markets because of the decline in US dollar. Even as the UST tax reforms have gone through, markets perhaps were already factored that in. And you have seen reports suggesting that there isn't going to be a big economic impact out of this, and that's really led the markets easing off. The crude oil prices have gained because it's a fifth straight week of inventories decline, and a huge one at that. The exports from US are rising, so is the case in sense of the capacity utilization, which has been on the higher side, and that has been supportive for crude. The other sector which is doing quite well is the metal space. You have seen fresh buying come in as the fundamentals improve, and even as the volumes are thinning and you are headed towards the year end, It doesn't really happen every year that you see fresh buying coming in at this point in time. But then again, you have seen very strong economic data from China. The US dollar is on the weaker side. The EV story is back with reports on what kind of demand can we expect from 2018 until 2022, and that's taken the nickel prices at multi-month highs. You also are looking at a 2-month highs in copper in the Asian markets right now.
Okay, all right. Manisha, thanks so much for joining in and giving us those details. Well, with that, it's a wrap on Power Breakfast. We leave you with the picks of, I think before we wrap up, let's get in Mangalam. Mangalam, you're standing by. We thought we'll wrap up, but we want to hear the FNOQs, I think so fill us in.
I think you've got a lot of gifts. That's why you want to talk about wrapping the gifts and all that.
Go back to the desk and see.
All right. So what I can say is the FIIs. Yesterday they sold in the index futures about 350 crores thereabouts. But remember, it could probably be because of early rollovers. Next week is the expiry, but a lot of the FIIs will be on holiday next week itself. So there was 5,000 long contracts, 10,000 short contracts added. The premium that we were talking about yesterday, which fell to about 7.5 points, has now gone back and risen to about 26 points itself. I was talking about the rollovers. If you take a look at the Nifty Jan futures contracts, in the last 2 days itself, it's added close to 25 lakh shares in open interest, indicating that there could perhaps be some early rollovers. In index options, today is Thursday, is the weekly options expiry for Nifty banks. So there were a lot of long puts and a lot of short puts added by the FIIs. Remains to be seen how much of that was attributed to Nifty bank and how much to Nifty. But talking about the Nifty itself, all through yesterday's trading session, despite the breather that we took, a lot of puts were written on the 10,500 mark, indicating that the bulls still believe we can go higher from here. As far as Nifty bank is concerned, 25,900, 25,800, 25,700, all those calls have been written, while the puts that were active were 25,300 as well as 25,400. We're somewhere in the middle of that range itself. A lot of purchase in stock futures could be explained by early rollovers and a lot of short covering that we saw in the Reliance Group stocks. A lot of long positions, of course, they were added in both PVR ahead of the big release and Ramco Cements, the big mover yesterday.
Okay, all right, Mangalam, thanks very much. Well, now we're going to wrap up on Power Breakfast, but we're going to leave you with the picks of our bullseye contestants. Stay tuned, Bazaar Morning Call on the other side of this break.
My first call is a buy call on Jet Airways. The stock closed at 737 rupees yesterday. It could be bought for an intraday target of 760 and a stop loss of 720 should be strictly maintained on the stock. My second call would be a buy call on Indiabull Real Estate. The closing price of the stock was 218 rupees. It could be bought for an intraday target of 230 and a stop loss of 210 should be strictly maintained on the stock. My third call would be a buy call on Vivimed Labs. The stock closed at 104 rupees 70 paisa yesterday. It could be bought for an intraday target of 112 and a stop loss of 98 should be strictly kept on the stock. My final call would be a buy call on Tata Elxsi. The closing price of the stock was 960. It could be bought for a target of 980 and a stop loss of 940 should be strictly kept on the stock.
I have a sell call on PC Jewelers futures. Stop loss 458 and target 427.30. Next one is a sell call on Granules futures. Stop loss has been placed at 131.20 and target on the downside will be 122.40. The third one is also on the short side, that is Bharat Financial Inclusions futures. Stop loss 1028 and target 965. The last one is on the long side, that is NIIT Tech. Stop loss 625 and target 667.
L&T Housing Finance, buy with a stop of 165 for targets of 185. Tata Motor DVR, buy with a stop of 225 for targets of 245. Reliance Infra, buy with a stop of 460 for targets of 490. And Star, buy with a stop of 810 for targets of 860.